Hello everybody, welcome to Monday Morning Must Knows. My name is Merlin Rothfeld and we've got a lot to talk about for this upcoming trading week. Now, of course, I like to do a little recap of the previous week's session. Last week, of course, Amazon and Apple reporting earnings. Apple, the more significant of the two, really causing a nice catalyst for upmarket moves on Thursday and Friday. You also had the FOMC statement on Wednesday, which might have fueled that nice rally as well. And we're going to talk about central bank announcements this week. We're going to talk about earnings as well, but I'm going to talk about something I normally don't do. I normally do not do a lot of gratuitous self-promotion. However, I am doing something fun this week. I will be up in San Francisco Bay Area at the Silicon Valley Investment Master Symposium presented by The Money Show. I'll be giving a presentation on digital assets. Of course, I can talk about anything there, but I'll be talking about filtering chaos, how to choose the right cryptocurrency and digital asset investments. You can register for that by going to moneyshow.com. And hopefully we will get to see you there. I'm going to be there for the day, which means I'll give my presentation, which I believe is at 10:30 in the morning, and then I'm leaving probably, I think, 5 or 6 at night. So I'll be around that event all day if you guys want to talk, mingle, talk markets, cryptocurrencies, whatever, but hopefully we'll see you guys at that Money Show for my cryptocurrency presentation. All right, now let's dive into the fun stuff. Let's get to our earnings calendar. It may not have the heavy hitter names that we normally get. Well, what it does have is a lot of names. It may not be quality, but we've got quantity happening on this week's trading session. 1,913 companies reporting earnings this week. We start things off on Monday with some decent names: Vertex Pharmaceuticals, Palantir, Simon Property Group, and Tyson Foods. Tuesday brings you Disney, BP, Arista Networks, Duke Energy, Electronic Arts, and then probably my favorite one of the day, going to be Wednesday. You have Uber, Anheuser-Busch, AB InBev, Airbnb. You have ARM and Shopify. I have been pretty bullish on Budweiser since their fiasco a couple months ago. I'm also very bearish on ARM, which had a massive sell-off due to the unlocking of shares. Now, the last 2 days of the week, Thursday and Friday, rather quiet. I did put BYD Motors on here because this is a company that Warren Buffett was invested in early on. And then he unloaded his shares. And it was, this Chinese competitor to Tesla. And of course, EV cars ever gaining in popularity. But you've got a lot of competition with Fisker and Lonsdale and NIO and Tesla. A lot of companies competing in that space. But BYD is kind of this darling one that a lot of people are very bullish on. So curious to see what their numbers look like and how their growth is accelerating or decelerating, as the case may be. And that brings us to Friday. I didn't want to leave it blank, so I put Allianz, one of the major global insurance companies out there. They're reporting on Friday, 1,913 to be precise. Now, we talked about central banks last week, of course, with the U.S. markets and the FOMC keeping rates right where they were at. No surprise there, and we'll talk more about that in just a second. But we want to shift to the Southern Hemisphere, to other central banks. There is a world outside of the United States, my friends. We'll talk about the Reserve Bank of Australia to start things off on Tuesday at 12:30 a.m. Eastern Time. That is literally right after the stroke of midnight. They are going to come out with their rate announcement, which is expected to stay right at 4.35%. Now, Australia's price chart has been rather sideways. It really hasn't done much for the past few months. So maybe this will be that piece that breaks it out of that kind of sideways channel there. So all you Forex traders, be careful right around midnight on Tuesday morning. Now let's go to the next one. Across the pond, the Bank of England reporting their rate announcement. Everyone's expecting them to stay right at 5.25%. That's going to happen Thursday at 7 a.m. Eastern Time. Now, they've been on a slight downtrend for the past few months. Of course, some good opportunity there for you Forex traders as well. Now, the key here is when these announcements happen, we just don't know what the response is going to be. I have seen it where they will keep rates right the same, and all of a sudden it just got massive moves up or down. Same thing whether they raise or decrease. So it's really more about being aware of the time that these announcements happen. And sometimes more importantly, particularly for the US markets, it's not the rate announcement itself, right? When we had our rate announcement last week, the market had a little bit of a pop. When it really took off was when Jerome Powell was giving his press conference 30 minutes later. That's really where the fireworks started happening. And I think that's going to be the same thing for the Reserve Bank of Australia and the Bank of England. So keep your eye on not only the rate announcement, which I have listed here, but the press conferences, which are usually half hour after those rate announcements. Okay, let's shift back to the United States here for a second. If you go back into the tail end of 2023, the expectation was 8 rate cuts, right? Markets are like, yes, cuts, rate cuts. Got their banners, they're cheering. Market's going to surge, rate cuts. Well, our markets have been doing pretty darn well. If you look at the charts, we're still teetering near all-time highs for most of the major market indexes. So things are good. Why do you think the Fed needs to cut rates to juice these markets higher? Well, it's an election year, Merlin, you might say. And I would say you're probably right. But what's interesting is that rate announcement forecast went from 8 And then just back in April was, well, maybe I'll only get 3 this year. And now expectations might be dropping even lower. I will put myself in the camp. I believe we're going to get 1 rate cut this year simply because it's an election year and you want to have that on your books to juice those markets for your re-election campaign. But what does the market really think? Well, here is a chart from the CME Group. So for those of you who may never have seen this one before, what it does is it charts out the probabilities of rate cuts or increases based off of the futures trading going on for Fed fund futures. You can find this information at cmegroup.com. It's a great resource. I look at it regularly to see what markets are expecting. Now, at the bottom, you see some blue vertical bars, and those are the expectations of rates by the end of the year. As you can see at the top there, it says target rate probabilities for the 18th of December 2024 Fed meeting. That will be the final Fed meeting of the year. So what are those percentages? Well, currently you can see at the top, we are right now between 5.25 and 5.50. That's 5.5% for the Fed funds futures rate. But what are they expecting going forward? Well, let's reveal the percentages at the bottom of the chart here so you guys can see more clearly. Well, there's somebody out there that thinks 0.3% is logical, that we're going to have 5 rate cuts by the end of the year. But if you look at the big percentage in the middle there, that 36.8, right now that's the odds-on favorite, and that shows 2 rate cuts this year. But you notice to its right, a 30%er. So it looks to be markets are expecting 1 to 2 rate cuts by the end of the year. And I'm putting myself on that 30% mark where I think we're going to have 1, as I already mentioned. Now, it doesn't matter what I think. It doesn't matter what you think about the markets. Bottom line is these numbers can have a significant impact on where the markets are going to be going forward. And a lot of part about a futures contract is you're anticipating what the future is going to hold. So this information here can give you some insights as to what the Fed's thinking and, more importantly, what the market is thinking, because that could be the driver of prices going forward here through the end of the year. So it's starting to be a shift in sentiment. I'm a big believer in the trend is your friend until the bend at the end. Well, the trend seems to be fewer and fewer rate cuts happening in 2024. Maybe we get them in 2025 or whatever. At some point, we probably will. But there was this huge overzealous joy that the market had for 8 rate cuts this year, and it just went 8, 7, 6, 5. We're counting down. I even have a good close friend that believes we're going to get a rate hike by the end of the year, and that would certainly create some problems for the markets. Bottom line is keep your eye on the FOMC meetings. You can check out that calendar at CME Group to see what the forecast might be. Right now, I believe it's going into middle of a little bit later on, 2 more meetings before they even think we're going to get 1 rate cut. So we'll see what happens going forward. All right, everybody, you got a lot to talk about this week. You have some central banks, you've got some pretty good earnings coming up, and a lot to think about with these interest rates and what's going to be happening with our central bank here in the United States. Hope you guys have a fantastic trading week. That is your Monday Morning Must Knows. We'll see you next week.